Welcome everyone to this Medilink Midlands webinar. I'm going to start with some housekeeping notes shortly, but I'll just let everyone join as we approach the start time. Thank you. So, good morning and welcome to this Medilink Midlands webinar. My name is Becky Sharp and I'm from the Marketing and Events team at Medilink Midlands. Today we have collaborated with one of our Medilink Midlands patron companies, TBAT Innovation, to bring to you this webinar on using government schemes to fund your innovation. My colleague Neil will shortly be introducing the speakers to you. Before we start, there's just some housekeeping points I need to share with you. In order to reduce the strain on your local network, please close all unnecessary browsers and internet programs. If you do experience audio issues, please note this may be on a local level. Please consider dialing in using the number on the control panel or the free phone number in the confirmation email received. All of your microphones are muted. If you have any questions, please do feel free to put them in the questions section on the go-to panel, and we will be addressing the questions as we go through the presentation, and then if we have the opportunity at the end too. After the presentations, like I mentioned, we'll try and get through all the questions before we finish. This webinar is being recorded. A copy of the recording will be sent to you after the webinar. Presentation slides are available for you to download if you refer to the handout section on the go-to panel. Unfortunately, due to GDPR, we're unable to share a delegate list for you for this webinar. So that's all of the housekeeping items. I'd now like to add on my colleague, Dr. Neil Barnes, Project Leader Innovation at Medilink Midlands. Over to you, Neil.
Thank you, Becky. Good morning, everybody. Once again, I'd like to welcome you to this Medilink Midlands webinar, and thanks so much for joining us. Medilink Midlands is a not-for-profit business support organisation that aids healthcare and life science companies to establish, develop and grow. This webinar forms part of the essential support that we provide to the sector on a continuing basis. Despite the current national lockdown, our commitment to supporting companies in the sector hasn't changed, and we will continue to assist eligible businesses through this current period and beyond. For example, in the East Midlands, our ERDF grants for travel, for innovative projects and for clinical trials are guaranteed through to the mid-2023. Please get in touch if you need any form of support or guidance, particularly about the grants, and we are as close as a phone call or a video call away. Now, in this session, the TBAT Directors, Matt Symonds and Sam Stephens, will be providing you with latest updates on many different types of funding and tax relief opportunities in support of your innovative companies. Our speakers are eager to inform you of their knowledge and experience. Plus, if you wish, we can make direct introductions to Matt and Sam afterwards if you just ask us. As this is an interactive session with plenty of opportunities for questions, please don't hold back and post all your questions through the question section of the control panel. Finally, I'd like to thank both our speakers, Matt and Sam, for joining us today and to share their knowledge. Once again, thank you to you, our delegates, for battling through the snow to attend this webinar, and I'm sure we're all looking forward to a comprehensive and interesting presentation. No pressure, boys. With that, I'd like to hand you over to Matt Symonds, Managing Director at TBAT Innovation.
Thanks, Neil. Morning, everyone. Thanks a lot for taking time out, and as Neil says, for battling through the snow. I'm online today with my co-director, Sam Stephens. So, Sam, you can give us a wave.
Is the screen up and running, everybody?
I can't see it at the minute, Sam.
There we go. That should be fine. Should be coming through now.
The wonders of modern technology, eh?
Hey.
So welcome everybody. Thank you very much again to Medilink. We always enjoy doing these webinars. You and the team always make it very, very easy for us. As a management consultancy, a good number of years ago, we came from kind of the sort of transport and energy sectors, saw an opportunity in health, and Medilink were pretty much instrumental in getting us into that sector and kind of giving us access to clients. So we're eternally grateful for them, and anyone out of the 51 that have kind of signed up today, thank you. If you haven't already engaged with the team at Medilink, then you definitely should. So yeah, there we go. And they didn't even pay me to say that. So yeah, webinar today, government schemes to fund your innovation. So we're going to look at grant funding and R&D tax credits and capital allowances. Fundamentally quite dry subjects, but we're talking about how to get cash into your business to enable you to do something interesting. So hopefully we've got a few things to say that you might want to hear about. Any questions throughout, please stick it in the chat function, and Sam will pick it up and throw it at me while I'm talking about grants. I'll do the same for him on R&D tax credits and capital allowances. I guess key message for all of this before, if there's only one thing you take away from it, there are a number of very, very good incentives that can help support you as businesses to innovate. So make sure that you have a proper look around at grants and the tax incentives before doing anything. Yeah, talk to us, talk to Medilink, make sure that you get some support before going down the line of doing stuff.
Yeah, I think that's really important, Matt, is to plan what money you need and to understand when you need it in place by. Certainly bearing in mind that things like a grant might take 6 to 9 months to get in place. So that planning both the tax and the grants really, really important.
Yeah, and unfortunately none of them happen overnight, do they? So it's just thinking about what you need and when. So yeah, grant funding wise, so what is grant funding? So there are a number of grant funding pots available on a national and regional level. So you can talk to people like Medilink who've got pots for innovation on a more kind of regional level. We work a lot with Innovate UK on a national level, but today we're looking at grants for research and development, so supporting innovation. And that can go from a grant of 25k, anything up to, I think the biggest that we've done is around about 25 million. So there's a lot of serious kind of cash out there that you can access. A great point of reference, so Innovate UK is I guess the sort of government quango arm that is tasked with putting out grant funding to UK businesses. Used to be Innovate UK's website we would point you at, but it's now moved under UKRI, so the UK Research and Innovation Network. So they're trying to pull everything together. So if you type in UKRI and Innovate UK, you'll get a full list of grant opportunities that are out there at the moment. They also now link in with the research council. So if you're doing early stage stuff, it will also list all that on one website. So it's a pretty useful reference site. So if you go to UKRI rather than Innovate UK. So if we move on to the next slide, Sam, please. Sorry, forgetting my manners. Thank you.
Yeah, just by the way, Matt, I've got builders in. I've asked them to be quiet, but occasionally you will get a crazy hammer drill noise going on. And for that period, I'll just mute, but I'll be back.
Yeah, no problem. Similarly, I think they're trimming the trees outside the office. So yeah, the usual comedy of errors, Sam. So we'll crack on. But so why bother with grant funding? So it is in effect free money. You don't have to pay it back, provided you're not doing anything unscrupulous, criminal with the money. There's never been a drawback on any grants that we've seen in the past. So as long as you're trying to do and deliver the project that you said you were going to do, there's an acceptance that there's risk. So sometimes those projects stop. Sometimes they're just simply unachievable because there is technical risk and there's innovation in it. So it's free money. It's a great green light, a good flag waving exercise for further investment. So if you've been through the mill and Innovate UK have looked at your project, your business, and kind of gone, well, actually, yeah, we're thinking of backing these guys with a grant. It's a great way of kind of encouraging, for example, private investment into the business. It also acts as a good discussion point. So we work with a lot of clients and potential consortia that come together around a pot of grant funding. They may never access that grant, but it provides a good talking point and a good way of, I suppose, pulling people in to collaborate. So if you've got a key client or customer that you're trying to get into or trying to do more with, it's an opportunity to have further discussions, I would suggest. And finally, yeah, it removes the risk of investing company money, but also allows you to kind of stretch what investment you've got. So if you've already got private investment in for 500k, and you can match it with a grant, for example, then obviously you can stretch your R&D and innovation a lot further than you would have without it.
And it also allows you to do an awful lot more without selling more shares in your company. Yeah, they do work well together.
Very much so, yeah. So I think if we flick on, so this slide's a bit crowded, but it's all we're trying to say here is that there are a lot of different grant funding opportunities out there, but you'll also see that they are sector or technology specific in a lot of cases. Obviously, we're focusing here on health and life sciences, but in that list there, you've got smart grants, which are generic, so that's for any open innovation, but we'll talk a bit further about them in a minute. DASA is basically MOD related grants, so anything to do with security and defence, then they're looking for innovations there. So if it can deliver a real benefit to the services, the armed forces, then it is well worth having a look at that as a scheme. Rail has popped up in the last week, so that again is, if you've got an innovation that's fairly well developed, it's demonstrating that in a real rail environment. Transforming foundation industries, so this is like cement, glass, ceramics. It's looking at reducing energy usage, reducing CO2 outputs, that type of stuff. Quantum technologies, we're working with a couple of companies at the moment that are trying to access that. So, you know, fairly wacky new stuff in terms of quantum developments. But again, it might be that people in the audience are interested in that side of things. I4I product development awards there, looking at really medical devices, I guess sort of in vitro diagnostics, patient focus, digital health, that type of thing, so very much relevant to the sector. APC 18's automotive, you've got plastics in there, so there's a real mix. But I guess for specifically for this audience for health and life sciences, you're looking at smart, the I4I awards, which are kind of coming up in sort of April time. And then you've got things like healthy aging investment partnerships. So Innovate UK is starting to trial mixing grants with private investment. I think they would themselves will admit that they've had some success, but some challenges. But that's what that healthy aging investment partnership is, where they would give you X amount of grant, but then they want you to match it with private investment. And in a lot of cases, they've got a number of private investors lined up. So interesting mechanisms to have a look at. In addition to what's on here, there is the biomedical catalyst, which is again all about kind of devices and developing solutions for the health and life sciences sector. We've just been through a round and luckily had some successes through that, and there's a case study in a few minutes that I'll talk about. The BIA, so the Bio Industry Association, is lobbying government now to get the biomedical catalyst back this year, so hopefully that will come up in the next sort of 6 months or so. So there's more health and life sciences funding on its way, and also the budget. Obviously, we've got on the 3rd of March with Mr. Sunak, and we fully anticipate there'll be more funds around COVID. So we've had a number of different rounds that were either very COVID specific, as in developers a new ventilator, or post-COVID, so you know, how do we work in a remote environment type stuff. So we're anticipating more grants to come out along the lines of the latter, in terms of, you know, how do we kind of cope with this post-COVID world. So lots of stuff out there. The trick really is understanding what they're actually looking for and whether your project fits. But people like us, Medilink, Innovate UK, KTN, they can advise on you know, where best to go, but lots to run at.
I think it's quite important to just sort of make a little note, is stick to what your project wants to deliver and try not to form a project just to meet a funding call, because they do take an awful lot of time and effort to both to secure and win, but also to deliver. And you want to be focusing on what your company wants to do, not go just grant chasing for the sake of it.
Yeah, very true. So yeah, mentioned smart grants. I guess these are kind of a mainstay of Innovate UK. They're repeat grants, so they'll come out every couple of months. Very broad, looking for innovation in general. Cross sector, can be any technology. But as it says there, it's got to demonstrate at certain points. So it's got to be innovative. You've got to have a business plan to it. There's got to be some real way of commercialising it. If you're really early stage, you don't necessarily have to have a customer lined up, but being able to tell the story of how you're actually going to commercialise these things and get some money out of the back end. So you could do really early on sort of feasibility study type project, or you could do more experimental development. So you might have already done the kind of tricky will this work bit, but now you're wanting to demonstrate it in a number of different scenarios so that you can actually get some engagement with your end market. There's a call open now, closes as it says there, end of May. Proven scheme, it is competitive, and we'll come on to that in a minute, but a good one to have a look at. So it's about £25 million in the pot, and grants go from about 25k up to sort of 2 million level. So useful sums of money and well worth having a look at.
And also, there, I don't know if you mentioned, Matt, you can be a single company application, or you can do it as a collaboration with advantages and disadvantages to both, really, in the application process.
That's right, yeah. So you just there needs to be one SME involved in the project in some way, but yeah, it could be a single SME or a collaboration. Just a quick one on funding rates, because recently we've had a number of clients that are getting confused about it. So I'm not going to go through every single number on the matrix. You'll be pleased to hear. But as you move from left to right, so as you move from, I guess, kind of I've got an idea through to I've got something I want to get into the market, the grant funding rates drop. So the idea being that you're nearer to commercialisation, you're nearer to making some cash. So therefore, they'll give you less support because you're nearer to market. Majority of work that we do is in that industrial research category, and we work with a lot of micro and small companies. So it's 70% grant funding rate. So at risk of stating the obvious, if it's 100k total project that you're trying to do, then you get 70k towards your project. And the way that that is then realised is every quarter as you go through that project, you look back over the previous 3 months and say, right, I've spent 10k. I want 70% of that back. I want 7k back. So majority of grants that come out through Innovate UK, through UKRI, are sort of payment in arrears, basically. So you need to be conscious that that's the case, because cash flow wise, you need to be able to bankroll yourself for 3 months before you get the grants coming in.
Okay, I've got a question, Matt.
Go on then, hit me.
I'm going to cut across there. So question, we are a self-funding micro SME. I think they're in the sort of pre-proof of concept stage, and we need to move into market research and commercialization phase. Where can I find some grants? Innovate UK and banks tend to exclude us on the lack of income and trading history. So do you want to, I think if you talk around the lack of income and trading history kind of as a starter for 10, and then come to where to go for grants.
Yeah, I mean, I think in order to access Innovate UK grants, you go onto a portal and fill in an application. The only requirement really on there is for you to have a limited company. So you need to have a registered UK company to actually get onto that system. But you don't need to have a trading history. I think what you would need to do is bolster the strength of your team and demonstrate that you've got the kind of ability to take an idea and then create it into a business. So you don't have to have a trading history, but you kind of need to give a good backstory as to why you're credible and why Innovate UK and UK government ultimately should be giving you some money to develop your product. And
I think it's also they would need to also be able to say where their money was coming from to match the grant. So if it was 70% funded, where the other 30% was coming from.
Yeah, so we work with a lot of startups that haven't got a trading history, but like Sam says, they've sort of, I guess they've trodden the boards a bit in terms of the private investment circuit, and they've got some investment there already, which I guess gives you a bit of credibility going forward. In terms of where you find the actual schemes themselves, like I say, UKRI, the trick is making sure that whatever you're doing fits with that particular call. But yeah, more than happy to have a chat offline or whatever. One of the other things I wanted to touch on is with the smart grants, because it's broad and it's basically anything innovative, it is very competitive. this is a kind of, I suppose, a scary stat, that top right-hand bit. So of all applications that Innovate UK received, they only backed 6.2% of them. But this call was a bit of a bizarre one, because obviously going through the pandemic last year, this got delayed, and so I think the 2,400 is the biggest number of applications they've ever had into one single competition. So initially people look at this and go, oh, I'm not going for the smart grant because it's too competitive. It is competitive. Normally on a normal, if we ever go back to normal, it's around about sort of 10% of all applications that get backed. But we're kind of sad enough to look at the stats and do a bit of analysis. And if you're scoring over 75 out of 100, so you have 10 questions, if you can score over 7.5 out of each of those 10 questions out of 10, your chance of success goes up to between 25 and 30%. So, you know, if it's 1 in 4, 1 in 3 that's going to get backed with decent applications, then it's still well worth having a look. So what this is basically saying is, yes, it's competitive, but there's a lot of terrible applications that go in. If you've got something that's well thought through from a technical, commercial and financial point of view, then you know, there's still a good chance of you getting your money, basically.
And I think also having gone through the application process is important, because it actually forces you to think about the costs, the timescales, the resources you need, the innovation, the technical risk, how you're going to exploit it. And they're all key things that an investor or a bank or a business angel might also look to have those questions answered. So it does actually force you to get a lot of your ducks in a row to go and talk to other funding streams as well.
Yeah. Yeah, so it was a question that we had before the event in terms of what are the usual success rates. So on the face of it, you'd say sort of 10%, but in reality, it's probably more like sort of 30% if you can actually pull a decent application together. Just a little bit on costs. Again, this is something that potentially trips people up. So yeah, either the SME that's applying or the consortium that's applying can build in all these costs. So from a labour perspective, one thing to note, if you're a director and you're taking dividend, it's only PAYE that counts. So you know, if you've got a low salary, 12k salary a year, and you're taking all the other money home through dividend, it's only that 12k bit that Innovate UK would see. So it might be worth considering putting more work into the team that's got a kind of fuller salary. But then you can.
Yeah, I'm just sorry, Matt, cutting across. Just on that, you also need to think, how many hours am I as a director putting into this? So if you're going to be working nearly full time on the project and you decide to pay yourself £30,000 in that year, you're going to get 70% of that. So coupled with an R&D tax claim, it actually might be more cost effective to actually pay yourself and be claiming that, because you get your 20% overhead rate on top. So it needs talking to somebody about to get the best story possible.
Yeah. So costs that you can include, obviously, you know, people working on the projects with PAYE, subcontractors. So if you're outsourcing testing or trialing, or someone's doing some manufacturing, they can all be built in. Overheads, you can calculate your own overhead rate. Innovate UK will let you have 20% overhead, no questions asked. So that adds 20% to your labour spend, basically. But we would always urge you to have a look at calculating the overhead, because you know, a lot of times you could be up at more sort of 60–70%. It is a bit more onerous, but it's worth doing it. Materials, so anything consumed during the project, so anything that's used and can't have a value at the end of the project is perfectly eligible. Things like tooling always get interesting. So is it tooling that's just used for the prototyping, or is it tooling that could eventually be used for production? And there's a bit of grey area there, but again, it's we can advise on that. Travel wise, if we're ever allowed to travel anywhere ever again, you can put your costs in for that side of things. And then the only area to be a bit careful on is on capital. So if you do invest in a piece of equipment, manufacturing, test equipment, whatever it is, you can only put in the depreciation of that asset into the project. So you can't, if there's a 10 grand piece of kit, you can't put all 10 grand into it. If you were going to depreciate that over 5 years, and then you know, a 1 year project, you can only put 2 grand in. So just be aware that it's not everything that you can build in, but you know, it covers a hell of a lot of the sort of standard project costs that you would incur.
Yeah. So I've got another question, Matt, if you're ready for one.
I'm ready.
You ready? You were born ready, weren't you, really?
I think
Do
so,
you
yeah.
ever have to tell an entrepreneur that their idea is not strong enough?
Yes. Yeah, I mean, it happens on a regular basis, and we do it in the politest way possible. I think a lot of the times it's not necessarily that the concept isn't strong enough. It's that maybe they haven't thought about how they're going to access the market, or they haven't really kind of done a thorough cut through of what it's actually going to cost them to deliver the project, or they haven't got proper engagement with maybe key opinion leaders or experts or whatever, just to kind of give it a bit more credibility. So I think majority of cases people come into us, they've got a genuinely good idea, but a lot of them we kind of hold off and say, well, look, you need to think a bit more about this area before it's actually strong enough to go ahead.
Yeah. Okay, and then I've got another one, just very quickly. These funds are just for UK-based institutions. So, so if you want to just talk about Innovate UK, where the company needs to be, maybe a little touch on foreign subcontractors, and then we're going to talk about European stuff later, aren't we?
Yeah, so yes, it's predominantly UK focused, but if you are a UK subsidiary of a large global company, provided you've got a UK registered business, then you can access funds. I think with Brexit and kind of recent developments, we are going back to that we are an island mentality. So we want everything to be delivered in the project in the UK wherever possible. There are going to be scenarios where, I don't know, some specialist quantum expertise only exists in Israel. Really, they're quite kind of reluctant to let monies go out of the UK, but there are scenarios where you could make a case that the only person in the world is actually sat overseas, and I think then there's a conversation with Innovate UK just to make sure that they'll back that. But no, in the main, it's got to be UK.
Okay, I'll ask the question. I'll give it a very quick answer because I've had a little bit to think about this.
Yep.
Or can you include partners from overseas? So some funds are for international partners and some are not. So there's something called Eureka, which is multi-country, generally across Europe, and they have partners from different countries, but the partners are funded by the country that they come from. Innovate UK won't fund foreign partners. So that's that one. And then the next one, Matt, I suppose you as well have a little look at this. If your company has cash reserves in the bank, will this reduce your chances of success?
No, not necessarily. I mean, I think again it goes back to the story. So a few years back, we worked with a large crane manufacturer, and they had a lot, kind of £1 million-ish in the bank, and they were asking for a grant of £250,000, let's say. And there were questions asked, but fundamentally they needed that working capital to enable the business to carry on. So the R&D was a separate stream to it. So no, just by having money in the bank, it doesn't stop you accessing grants, but it's kind of telling the story around why you need that money, and that it's attributed to other incentives across the business.
Yeah. Okay. So probably need to get a little bit of a pace on that.
Okay, I can do that. So these are quite sort of stating the obvious type points, but I guess putting an application together is relatively straightforward. It's just keep it simple, really. Answer all the questions, and there's a good set of bullet points under each of those questions. Just answer those directly. Don't use jargon, because it's assessors that can be from a number of walks of life, so they might not understand exactly the jargon that you use in your sector. So keep it simple. Do the kind of Fisher Price approach. Keep it very, very basic. They now have formatting options on Innovate UK's website, which is a real breakthrough. So you can do bold and underline and everything. But that makes it nice and easy for an assessor to read. Leave plenty of time for writing. We always say that, but you end up getting pushed to the limit in terms of pulling a bid together. But yeah, the more time you can leave, the better, really.
Yeah, I think that formatting is particularly important, because although you may be very tightly limited on number of words you can have, by clever formatting, you can actually space it out so it looks, you can get a lot more information in there really without it looking absolutely banged up, dead crunched up, untidy. So which was a problem with the old format, wasn't it, Matt?
Yeah, definitely.
Yeah. Okay, next slide, here we come.
Yeah, so EU, so the UK has associated to the Horizon Europe programme, so the new programme that's coming out in spring. So hopefully next month we'll start to get more details. At the moment we know it's a big lump of cash, and the UK can play in that pot of cash as we did previously for Horizon 2020. So that's fantastic news. We just don't know the details yet. But you know, there will be the standard focus areas of health, culture, creativity, civil security, food, bioeconomy. So it will have similar themes, I think, to previous, but we don't know the full details yet. But if you if you want to subscribe to our website, or just keep checking Horizon Europe, we'll no doubt be pestering our friends at Medilink to kind of put messages out as we know more. So hopefully we can keep you posted on that one.
Yeah, I think that's quite an exciting opportunity. I think the European stuff, especially, that's going out for another 7 years, and that's got to be good news, isn't it?
Yeah, definitely. And then this is my last slide. You'll be pleased to hear, Sam. So this is just a bit of a case study. So the reason I can't name the company yet is it's not been officially announced, but we had a success with a biomedical catalyst. When the list of companies come out, the name of the company is a colour and an animal, just so that I can prove that I've not made this up. But yeah, basically a really good scheme. That's now setting them up to go forward on developing some really interesting immuno-oncology solutions. So yeah, but I'll leave it there because I know that we're short on time. And yeah, I guess we'll pass over to you, Mr. Stephens, and you can give us a bit of a whiz through R&D tax credits and capital allowances.
Which I think personally is a lot more exciting than grants, Matt. But there you go.
Yeah, we haven't got time to debate that, have we?
Each to their own. So yes, folks, if you've got any questions either for Matt or myself, please put them in the chat, and we'll pick them up as we're going through now. And even if they're about grants, we'll still pick them up as we go along now, and just pause what we're going to do about R&D tax. So really, making R&D tax working for you, there's 4 things you need to consider about R&D tax. Very, very simple. Claim it. I come across companies who've been doing R&D for years, and they say, oh, well, it's not a proper scheme, it's a tax fiddle, we don't need the money, blah, 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 and they don't claim it. And I go in and say, it's all in legislation, you can do it, you've got such a strong case, come on, let's do this. And all of a sudden they're getting 100, 150, 200,000 pounds back into their account. So make sure you claim it. It's absolutely fantastic. The next thing, if you do it yourself, you're benchmarking yourself internally. If you're doing it with your accountant, how much experience have they really got doing it? Engaging with somebody external to help you. They've probably got a list of lots of companies that they've worked with, different fields, different industry sectors, and they can help you maximize it. And to me, it's all about balancing the technical strength of what you've done in your R&D against the money that you spent doing it. And so it's quite important to maximize it, because it is money that the government has got, and they want you to have it to further developing your technology and your innovation. Whilst we're looking at maximizing it, have a quick look at what you've done in the past on previous year's claims. It might be that was done by a different group of people, maybe a previous finance director or R&D chap. Have a look at the previous year's claims. If you can get another 20, 30% out of a claim, that's cash onto your bottom line to spend on innovation. So always have a quick look at those as well. We've seen this quite often, that I hope there's no accountants out there, because I'm most likely to offend them. They seem to, it seems to be goes possible with my job actually. They might say, okay, so R&D tax, we've put it through what's called the tax computation, you've made some losses, let's push those through into next year, because you might make a lot of money next year and it will save you tax. So that's great, and that's kind of at 20%. But what you can do is you can cash those losses in for 14.5%, so not quite as good, but then that is hard cash coming into your company that you can spend on what you want. And it might be it's on marketing, it might be on process engineering, it might be on new product development, because you don't know what's going to happen next year. And if you are going to be profitable, you may not be fully profitable and need all of those losses for years to come. So really think carefully. A lot of my clients, they say, you know what, Sam, why don't we have cash today? Because I can spend that. That's real to me. So there we go. 4 key things to consider when you're looking at this stuff.
I think, Sam, as well, it's important to say that some clients, or that our clients now, we're a bit kind of in fear of doing it because they think it's going to pull down HMRC onto them, and they're going to be audited and up and all that sort of stuff. But I think it's important to say that it's certainly not that isn't the case, is it? It's very much no. Actually they're trying to put the monies out to these innovative companies.
Yeah, I mean, there's no doubt about it, Matt, that if HMRC do pick up a claim and they're not happy with it, they do ask questions, and they can be like a dog gnawing a bone. They can go on and on and on, but they're only ever looking at the R&D. They don't go, oh, and while we're at it, let's have a look at your corporation tax and your VAT, because they're not interested in that. It's, is this really innovation? How is it funded? Is that an appropriate claim that you're making? And where we've supported companies through that process, they've always been fully upheld. And using somebody who knows what they're doing to be able to justify even more, it can be quite important. Anyway, what is R&D tax? It's a fantastic scheme by the government to support innovation and encourage companies to spend money on innovation in the UK. 2 key schemes, which I'll come on to in just a sec: a small company scheme up to 500 people and a large company scheme. And every time they look at this, the government of any colour, shade, whatever, does seem to improve it. There's a bit of a quirk on that, which I'll come on to right at the end. But on the whole, it's improved every time they've reviewed it, because it's a very cost-effective way of getting funds into companies to innovate. So I mentioned the 2 schemes. SME, in round numbers, if you make a lot of profit, it's worth 25 pence in the pound off your tax bill. If you're loss making, you can cash it in up to 33 pence in the pound, which is a check from the HMRC into your bank account. So really terrific stuff. And then on the RDEX scheme, which is the Research and Development Expenditure Credit, generally all large companies use that. And I'll come on to how SMEs can also access that on special occasions. But as you can see, it's not as beneficial. It's kind of at 10 pence in the pound. Did you spot that question coming, Matt?
I did, yeah. I was going to cut across you there, Sam. So if we
ask me a question, Matt.
Yeah, I'd like to ask you a question, Sam. If we're not taking dividends or salary, is R&D, so are R&D tax credits still claimable?
That is a terrific question. And I'll answer that in 2 parts. So the first part is, at the moment, yes, you can. So at the moment, if you've just set up your company, you're paying subcontractors to do work, we can make a claim against the cost of those subcontractors doing the work, or you buying in materials. So that's fine. The second part is they've changed. I said that the government generally keeps improving it, but there's one quirk. The quirk is now there's a limit to the cash that you can get back off HMRC, and it's all to do with the amount of pay as you earn and against the tax that you pay as being employed. And if you don't mind, I'll cover that off at the end, because I've got a slide on that specifically. And that legislation, pardon me, only comes in on the 1st of April this year. So looking backwards, we don't need to bother with that. Yes, we can make a big claim, despite if there's no salary or dividend or whatever. But looking forward, we might have to change that.
Great, thank you.
Cool. So in nuts and bolts, this is what it's worth. The first column there of no R&D claim, you can see that they make a bit of profit, 30k, and they have to pay their 19% tax, and they take home 24 grand. You can see the third line down, R&D costs of 20,000. If we make an R&D claim, we can uplift this by this 130%. That is what the benefit currently is, and we take that number off our net profit. So for tax, our net profit now is only 4,000, and we only pay £760 tax instead of 5,700. So by making an R&D claim, we have saved ourselves the best part of 5 grand in tax. And that is a very, very nice, simple example of why everybody should consider doing this. It's a bit of a no-brainer, really. Probably main benefit is it's non-competitive funds. Matt touched on grants being only 5% get funded, 20%, whatever. HMRC have got a budget of something like £3 billion or more now to fund this scheme to SMEs. If you've done the R&D and you've done a good technical case and presented the numbers, you will get your tax benefit or your cash back. They have got money there ready to go. So there we go. That company, £5 better off. There's a limit to when you can claim this, going back in time. So we're partway through, we'll say February 2021, and we can go back and look at the year that ended in December 2019, for example. Once we click over December 21 and into 2022, we lose the opportunity for looking at that December 19 year. So you get 2 full years plus your current tax year in a nutshell. So we've just been doing a bit of work for an international PLC, and we've been looking at the USA, Canada and Australia, and they have got a lot more complex tax systems. They do R&D tax credits, a lot more complicated, not as generous and shorter time scales. So the UK is actually really well positioned for this. 2 full years plus your current tax year is your time scales.
Sam, do you want to touch on furloughing, or is that kind of later on?
No. So no, it's not later on.
You just don't want to touch on it?
I don't really want to touch on it. So my understanding of furlough is, if your tax year ran from the 1st of April 2020 until March 2021, and you furloughed somebody for 6 months, for that 6-month period, we cannot claim any R&D tax claim against that person, because essentially the government's been paying them to stay at home. When they've come back in and you are paying them as a normal salaried person, it then clicks into being put into a claim. And it might be that you've furloughed somebody on and off throughout the year. It's only the working periods that we can use as part of the claim. Oh, got another question, Matt. Go on.
We?
Yeah.
Oh, what happens if the R&D project is paid by the customer?
So this is a terrific question. This is, and there's a lot of different answers to it. So if you were a drug company and you were commissioned by AstraZeneca to develop a drug, they want to own everything lock, stock and barrel. And you can only make a claim if they are a large company, so that your customer is a PLC sort of thing. And you can only claim it under the large company scheme, so you only get your 10%, because they own the IP. If, however, you're a web company and somebody asks you to do something really tricky, you might say, actually, developing that bit of tech is useful to me as a company and I can use it for my clients. So what I'm going to do, I'm going to put in the contract that we will deliver what my client wants, but the IP around the clever stuff we will keep and we'll do at our own cost, and you charge the client for just bolting it all together at the end, which is what they pay for and then can use, but you retain the core IP and you can make a claim under the SME scheme. So it's a great question. There's a number of different answers, and it would be a case of having a chat one-to-one on that, really, but probably is that you can make a claim.
Okay, we've got about 15 minutes, Sam. 15
minutes, okay. So what is R&D for tax purposes? Basically, if you've made an advance in knowledge or a field of science, then chances are you can make a claim. There has to be a level of uncertainty as to how you overcame or approached doing that piece of work. Now, all of this hinges under something called the BIS guidelines, BIS guidelines, amended in 2010. And HMRC might look at your claim and say, somebody else has already done that, you've not done any R&D, we're throwing your claim out the window. But then actually, if you read the guidelines further, it'll say you can make a claim if someone's done it before, but it's not in the public domain how they did it, or it's not obvious to a layman how it's done. So if you are going to do a claim yourself, or somebody else is going to help you with it, make sure you've read and understood the BIS guidelines, because they are the de facto what is R&D for tax purposes. My line is, if it's really made you scratch your head as somebody who knows their industry inside out, chances are we can make a claim.
So one more quick question, Sam. So just to clarify, I would only be able to claim materials R&D as the labour has been carried out by ourselves and not subcontracted out.
To claim materials. So I'll come on to what you can claim in a minute. So you can have stuff that has been subcontracted out. You can have materials. You can have labour. And if you've done that for somebody else, then you might need to separate out exactly what you did for your own purposes to be able to deliver the customer contract and what your costs were to actually pull it all together at the back end to hand it to your client. So,
Okay.
So again, it's a maybe, because that's the beauty of tax legislation, really. It's never clear cut. So HMRC they put this out nearly every year, and that number does reduce. So they're currently saying that upwards of 75% of companies who could claim don't claim. So there's a huge opportunity to have a look at this. HMRC, once you've done all the paperwork, sent it in, they are generally taking 6 weeks to pay out on claims, which is amazing. And so if you're doing a retrospective claim and you're going to get cash tax money back because you paid tax and now you don't need to, you will be getting that money typically within 6 weeks, which is a really, really good timescale that HMRC are working to. And HMRC do say that the average claim is upwards of 57 grand a year, which is a huge sum of money. If that's, if you think you only make 10% net profit, you turn over £500,000, 50k net profit to invest in R&D. This is like doubling that by making a claim. And that's saving you all that extra time and effort of trying to turn over another £500,000. So yeah, really, really good stuff. Why should you claim? I've mentioned before, £33 if you're loss making. So that's really, really generous. You can go back 2 years. I've said it's non-competitive funds. They have got the cash sat there ready to go. The benefit can come back as a cash back if you've paid tax previously and you're claiming it back, or you're cashing in losses, or it just saves the corporation tax that you've been saving very, very carefully to pay them 9 months after your year end. It will release that back into your cash flow. And it's all about investing in the future benefit of your company to help it grow more sustainable, better products, win more market share. So some really great reasons why you should get round to making a claim. I'll just see how many slides I've got. I don't think I've got many more. No, so we're about there now. Maximising your claim. So some people will think, oh, I've had an Innovate UK grant. Can I still make an R&D claim? The answer is yes, but you claim it under the RDEC side. So if you've got 70% of grant, this could be worth another 10%. So you could be getting up to 80% towards your R&D costs. Now, if 20% of that is the freebie that Innovate you give you on top of your salary cost, your project is now fully funded. So really great way to look at it. Always, can I couple grants and R&D tax? On the whole, yes, you can, but have a proper look at it. The gentleman, or so the person's question earlier about what happens if I've done a piece of work for a client. If it's a large client and they want to own the IP, yes, you can make a claim. It's under the RDEC scheme. So there's a couple of bits there as to why we can still use that as an SME. Again, really useful stuff. Look at the previous claims, we've covered that. And do you cash in your losses? Do you not? I would suggest cash today is often a better thing. It's a brave man who says, I'm going to make so much money next year after making a huge loss last year. I'm going to save and put all my losses forward. You know what? Cashing it in so you can pay for that marketing. I'd rather pay tax when I have to and have some cash to make things happen in the meantime. That's my opinion. People differ. So the second part of that question earlier about what happens if I don't have any salary. So they've introduced a cap, and basically if you're loss making and you want to get some cash from HMRC on a tax claim, there's a cap of 20,000. You get that up to that amount regardless whether you've got any PAYE or salary costs at all. If you want to claim more than that, then it's limited to this 3 times the pay as you earn, and the national insurance contributions. So this kind of works that out for you. So here, the maximum payable credit for this company is 3 times the PAYE NIC cost, which is 100k up to 300, plus your 20,000. So if you're a one-man band and you're paying yourself 30 grand a year, you might have £8,000 of PAYE and NIC. That's 24 grand plus your 20, £44,000 is your maximum cash back. If you can't maximise up to that, or you go over that, you carry it forward as losses, because they put that in. And that was because some unscrupulous people were setting up a little UK company, invoicing £3 million from overseas for a subcontractor, claiming £1 million of R&D tax claim, and then sending it back out the country. So HMRC weren't terribly happy about that, and they put this cap in. Now, what is important is that if you can prove you're doing really great R&D to HMRC, and this was driven by the UK BIA, Bioindustry Alliance.
Yeah, Bioindustry Association, yeah.
Yeah, they really drove through that. Our little drug companies would really suffer with this. So HMRC have built in a loophole. You can approach them and say, this is the R&D I'm doing. It's all in the UK. This is what I'm doing. They will actually scrap the cap, and you can go back to the old scheme. So they have put that in for R&D intensive companies, a mechanism that this cap does not apply, which is great news. And I was really glad that the HMRC saw fit to do that. Okay, we're about there, aren't we? Not long now. A couple of case studies. You can see the one on the right there, drug-free pain relief, 151 out of the 600. That was a good tax saving. Some of them more, when it's up to a third, is where they've got losses and they've cashed those in. But these companies have done really, really supremely well out of this. You know, if you're getting 25 pence in the pound off, that's a lot more R&D you can do. Or if you're cashing in losses, 33p, even more R&D. Really, really good. That kind of concludes my R&D tax bit. I've got kind of 6 minutes left. Please ask any questions. Love to hear from you. Capital allowances. This is another area of tax that is, I think, very, very not exploited enough. Can you exploit? That's the wrong word, isn't it, in tax? I'd encourage you to look at this. So if you've done some building work, most times you just write it off as a property thing over X many years. Capital allowance say, actually look at the work you've done, break it down into those qualifying items. You might be able to depreciate those quicker, and hence that will save you tax and put it back into your cash flow. In a nutshell, that's how it works. So we've just done this for a particular company up in the northeast, and they'd spent 2.5 million, and by the project we did, they've had a cash flow benefit of 140 grand. They wouldn't have had any of that had they just put it through as a normal capital asset, but through the capital allowances, it's released 140 grand back into their cash flow, and they were absolutely cock-a-hoop about that. But it doesn't matter what size of project, it's got to be worth looking at it, even if it's just a quick phone call. Talk to your accountant, challenge them. You do have to do a little report. You do have to justify why you've broken it down to the different areas. But if you've done a reasonable project, it's got to be worth looking at. And I think, Matt, I'm about there.
Yeah, 5 minutes to spare.
Do you want to know what my next slide is?
Well then.
Any questions?
Oh, brilliant. I don't think we haven't got any more on the chat.
No, you've covered all the questions off, and it's been really great. And a couple of people have requested introductions to you both already. So just to remind all of the delegates, once this webinar finishes, a survey will pop up, and if you could complete that, and there is a question on there if you'd like to be introduced, and that's what we at Medilink will do. We will put forward an introduction for you, so please do that. Thank you both for the really valuable information that you've provided today. Really informative, great level of detail. Just to remind the delegates, if you want to download the slides, they are available now in the handout section, just while I finish and wrap up and just mention a few webinars that we've got coming up. So We have one webinar coming up tomorrow, and that's with Orca about learning to get your healthcare app reviewed and accredited, and that's at 10:30 a.m. It's not too late to join us for that. And then next week on Wednesday, the 17th of February, you can join us and the East Midlands Academic Health Science Network to get your questions answered about ensuring that your business case is NHS ready. All further details on our events are on www.medilinkmidlands.com/events. So that does bring us to the end of our webinar today. Thank you both once again. Thank you to the delegates for joining us, and we hope to see you all again soon at a future webinar with us and TBAT and others. Thank you.
Thank you very much. Thanks all. Thank you very much.